Good morning, everyone. It's Marshall Gittler bringing you the morning comment for July 14th. The dollar weakened last week against most of the G10 currencies as the enthusiasm about the non-farm payrolls quickly faded after the FOMC minutes were released. Now, given that apparently speculation over Fed policy is dominating the dollar's direction even more than the data, as we can see, the highlight of the week will no doubt be the further clarification on Fed thinking from Fed Chair Janet Yellen when she delivers the twice-a-year report on monetary policy to Congress. She talks to the Senate on Tuesday and the House of Representatives on Wednesday. In the past, her formal comments have been just a rehash of what she's already said, but the question and answer period tends to be much more interesting. Last week, the major gainer was the New Zealand dollar, which rose after ratings agency Fitch upgraded the country's credit outlook to positive from stable and reaffirmed its AA rating. The release later this week of various Chinese economic indicators that are expected to show relatively robust growth in China could help to support the New Zealand dollar and the Australian dollar as well. On the other hand, the Canadian dollar was the biggest loser last week. All the losses came on Friday after the country's unemployment rate unexpectedly rose in June. That confounded traders who were anticipating a more hawkish tone at this week's Bank of Canada meeting. Personally, I disagree. If anything, I expect the Bank of Canada to take a more dovish stance to counter the recent strength of the currency. So Wednesday's Bank of Canada meeting is shaping up to be one of the main events of the week. There was more action in commodities than in currencies, though. Most of the commodities were lower. The oil fell as Libya reopened to oil export terminals, while a number of food crops fell as adequate rain and cool weather in the U.S. created excellent conditions for crops. I'd expect those two categories of commodities to continue declining. On the other hand, silver and gold had a pretty good week as the problems in Portugal sparked some safe haven demand. The technical outlook for gold and silver is still looking good, so I think this could be a buying opportunity. Today's calendar is relatively light. Eurozone industrial production is expected to have fallen in May on a month-to-month basis. The drop follows the steep decline of German industrial output announced last Monday and will probably weaken the euro as it confirms a broad slowdown in the Eurozone's recovery. Outside of that, attention will focus once again on the situation in Portugal and the performance of European bank stocks. ECB President Draghi testifies to the EU Parliament's Economic and Monetary Committee, but his views are well known and he's unlikely to say anything market moving. There are no indicators coming out from the U.S. today. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.